Hi, I'm Dave,
And I'm Paul.
and we're going to challenge you to transform your financial future through the principles of the most profitable business in the world, banking.
We believe everyone should be involved in two businesses, the business that you're in and the banking business. Everyday people can replicate what bankers have been doing for centuries to leverage capital and build wealth through private lending.
Join us as we uncover the truths about money, expose lies and myths, and flip conventional financial advice on its head. Here we go. And we're back. What's up, Paul?
Not much, man. What's going on? How was your fourth?
Oh, it was good. Pretty low key. It rained. It was like thunderstorm all morning. And then it cleared up and the evening was perfect. It got down, it was like 70 degrees and kind of breezy. So it kept the mosquitoes away. We saw a good fireworks show. Kids came back and lit off a bunch more stuff in the street. I'll probably get, they have those neighborhood apps like, what's it called?
Yeah, we've got one. I can't remember what the heck it's called, but yeah.
Yeah, I'm not on it because I think I would troll people. It would be too fun to troll people. I'm just waiting to see what comments show up because my wife has it about kids lighting off fireworks at 11:30 p.m. on a Tuesday. I'm sure there might be some people who got mad, but whatever.
Yeah, it's all good.
Happy birthday, America.
That's right.
Yeah, how about you?
Enjoy it.
How was yours?
Yeah, we spent the weekend down at the lake. We just stayed in a hotel, and then that was close. That accepted our dogs. So then we just drove to the lake every day, about 20 minutes. So it was great.
Every day, like 4 days or 3 days or what?
Yeah, we got down there Friday night, so we were on the boat Saturday, Sunday, Monday.
Yeah.
And we came back. The morning of the 4th.
Nice. Yeah, have you ever seen the fireworks show at 1600 Pennsylvania Avenue?
No, we're gonna go next year. We've got a plan.
Really?
This year the timing was just bad, but next year we got a plan.
Yeah, I think that'd be
So-
cool to see once.
Yeah, it's good.
Yeah,
It's supposed to be really good.
it better be.
Right, we're gonna owe
Should be.
taxpayer money.
Yeah, right.
Maybe it's donations, right?
Yeah, from the taxpayer.
Like your income taxes. Hey,
Actually,
we do have a question from a client if we want to.
Yeah, what is it?
That I got. So the question came up regarding, when is the best time, listening to the episodes and hearing me say that I'll never pay off my mortgage of my forever home or forever homes. And why is that? Because home equity is dead money. Equity in a home should reside in a place that you can get to it, i.e. in a life insurance contract, preferably whole life. So he got a follow-up question. So I talked to him on after I left my building today. I was just walking down the street in the rain talking to him, and then I get home and he texted, what about refinancing into a HELOC instead of, refinancing the mortgage and pulling the cash out?
Mm-hmm.
And I say that, the answer I would say is it depends on your personal situation. HELOC rates are high right now. It is a simple interest thing that you only get charged interest on when you're drawing on the HELOC. So it's a nice place to just have some cash that just in case you need it for something, whether it's inventory or a home repair or, whatever it is. But then the other side of me is like, I'm trying to get away from doing business with banks as much as possible because that's inflationary. I'm contributing to the problem, which we're going to get to talk about a little bit more later. And, why go through unless I need the cash, why go through the pain of going through the process to get a HELOC? So,
Yeah.
I don't know, but not a bad bank product. I have a couple of HELOCs myself and I use them when it makes sense. So I don't think it's a terrible thing to do if you're going to use it in the right way. And I'll just leave it at that.
Yeah, and I think what you're talking about really is it's replacing your mortgage with a first position HELOC. So you no longer have a mortgage. You just have an outstanding balance due on a HELOC. Is that what you're talking about?
No, he's talking about tapping the partial equity of the home. So say the home's $1 million, he's got $350,000 of equity.
Right.
Being able to tap some of that equity just to have another pool of cash that he could use for something.
For what? Yeah, right. I mean,
Right.
back when times are good, people tap that equity typically to go buy a new boat, right? Or do something really stupid.
Right.
And when times are tough, they would like to tap that equity to just pay bills if they needed to. But if that's, if that's where you're at, you could have 350,000 in equity, and the bank may only let you, give you access to 100, because all they care about is what's your ability to perform and pay that back.
That's right.
You could have, like, a lot of people are house rich, especially right now if they've stayed in their house for the last 10 or 15 years.
All my neighbors.
Yeah, so they get to put that on their net worth, their asset sheet, right? On the asset column, like, look, I have $800,000 of net worth in my primary residence. That's great. The only way you're going to get access to 800,000, I'm guessing, probably a pretty good guess though, is by selling your home.
That's right.
You're not going to go to the bank and they're not going to give you any access to anywhere close to 800,000. They're just not.
Yep.
So, I don't know, but that first position HELOC is an interesting thing. I looked into that, and I was real close to doing that at one point, and then the bank turned me down because I had just quit my W-2 job and started working for myself, so they didn't like that. So they said no. But that's kind of cool because it's basically principal only.
Principal only mortgage.
It's principal only mortgage, which is great, especially when you see that amortization table and you're paying, 80% to 90% of your monthly mortgage payment goes towards interest.
Yeah.
Right away. It makes your stomach hurt.
It's certainly better than a 30-year amortized mortgage.
Yeah, I think so. As long as you use it responsible, because you have access to all that cash. As soon as you pay that, put a couple grand into it, you have access to a couple grand. Let's say, is that going to be a temptation for you? Right.
It needs to be treated as kind of like a policy loan repayment. We shouldn't be taking policy loan out of our, against our death benefit unless we've made provisions to pay it back. So no different, right? But you could tell, people are going to abuse that HELOC, and that's how they get in trouble.
It is, and it's good to have in a pinch. Like I used my HELOC when I was starting my real estate business, 5-6 years ago, whenever that was, and I had to dig into that HELOC some months because I didn't make any money. So that's where I was going. I also had a whole life insurance I could have dug into, but the HELOC was just super easy. It was there,
super easy,
transfer in and out.
Yeah, my HELOCs are kind of my break glass cash.
Yeah.
Is kind of how I treat it. Like it's nice that it's there. If I have to do a deal, the money's, it's lightning quick. Obviously a mite faster than a policy loan, which will take a few days, but then I'll just take the policy loan out and replenish that HELOC. So that's kind of how on a personal level, how I use my HELOCs, but it's very strategic. Have purpose, intent, and an end state to, get free from the banks eventually anyway. So,
yeah. And I think most IBC users could utilize a HELOC responsibly.
Yes.
I've talked a few people out of using their HELOC to fund a policy and put a, big, single paid up lump sum in the first year. I'm like,
I don't like that.
It's not my style.
Yeah, I've had that conversation as well, and I think you hit it right on the head. Maybe in a rare case, but
I mean, can you? Yes, yes. The banker can do what he wants, right?
Right.
But the
those
banker
would be
can
financed premiums, wouldn't they?
Yeah, they would.
Yeah.
But the banker can also go out of business if he doesn't do things right.
Yeah.
So
that's right.
There's an example in Nelson's book about that. So, yeah, that's a fun conversation, though. It's a good tool to have access to, I think. A HELOC, if used just like anything else. Smart credit used smartly is a good thing.
Yep. And that question was from our shared client and business owner, Randy.
All right. Yeah, you just talked to him, right?
Yeah, literally today.
Nice.
Always great to talk to him, and great guy.
Well, we've got a comment on a YouTube channel, and it wasn't a question. It was just a comment, and a very nice one, I think, from Food, Peace, and Self-Care. It says, dang, these episodes are so short. Sad face. Thank you, boys. Happy 4th of July. So thanks for the comment. Because of that, I think we're going to do a marathon, like 4-hour episode today, long form, go Joe Rogan style. Yeah. And we'll bring in some people off the street and just talk to them. Hey, what if we actually brought in somebody who knew nothing about infinite banking and just introduced the concept to them and answered all of their questions live? What do you think of that idea?
I think it's a great idea. I'm trying to figure out how we'd find someone off the street.
That'd be interesting. I could take, I don't know. I just thought of that. I think that'd be kind of fun. We could demonstrate.
What if
to
it's somebody
everybody.
that we know?
Yeah, I think it would need to be somebody we know, but they don't know anything about IBC.
Right. That's, yeah.
That maybe we would consider them the typical, American household. Somebody like that. I don't want to call somebody the average or typical American because that's demeaning to somebody who's a bit above average. But yeah, that could be a cool future episode. So yeah, maybe we'll do that because that's fun. I mean, that's basically what Paul and I do all day long with prospects is have meetings with people we've never met before.
Yeah.
And just answer their questions.
It's a lot of Q&A and it's all over the map too. There's some that have tons of questions, some that have very few, and kind of everything in between.
Yeah. So yeah, maybe we'll do that. That could be fun. A good challenge for us. So, or maybe we'll just record one of our calls with a new client or new prospect and use that as an episode with their permission. So, yeah. Anyway, cool. Well, let's move on, man. So we kind of alluded to what we wanted to talk about today. You mentioned some things that are going to be on our list to talk to, but really we're brainstorming and you came up with the idea of like, hey, how does using the infinite banking concept strengthen the American family, American culture, American economy, all of the above? How does it strengthen our country in all of those ways? So I think it would be fun to just talk about that, mention a lot of stuff Nelson says in the book. Like you'll understand if you read Nelson's book, all of these points probably come straight out of his book anyway, that we'll talk about. But so what would you say, Paul? What's one of the biggest ways this benefits America and Americans, this concept?
Well, well, I think as students of history, you can go back and look at what has screwed up a lot of great civilizations, whether it's invasion or inflation or something else, famine, whatever. But certainly, and we're approaching this as is a lot of the, I guess, Western enlightened countries. We have an extreme amount of debt in this country as a nation, right? 32 trillion or something, and then unfunded liabilities of another 100 trillion or something. It's the amount of zeros that I tried to show Anthony on the iPhone. I was like, I had to turn the phone sideways, just keep it in zeros. Yeah. Like you can't even imagine it, right?
Right.
It's an obscene amount of money. So. But likewise, the average American family, and we were talking about this before we went live, was, how many American families can lose one or both incomes and survive for a month without swiping our credit card, or 2 months without swiping, and folks, do that exercise with yourself, as we've learned in 2020, like probably the worst year ever.
Yeah.
In our lifetime, quite honestly. The best year in our lifetime was obviously 1979, the year Dave and I were born. But
it's a good year for everybody else too.
Yeah, good year.
As we entered the world.
But when we have government shutting down the economy and you can't work because you're told to stay in your house and wear a mask and stay 6 feet away from the people that you live with, which is absolutely idiotic, but that's a different discussion, different podcast.
Yeah.
But how long can you survive? So IBC, I think, creates the mindset, creates the entity to address, what Nelson in the book calls on page 17 and 18, he talks about the problem. And we often talk about the problem And to me, in this discussion, the problem is undercapitalization.
Yeah.
Most people are severely undercapitalized.
And why are they severely undercapitalized? Like, you're talking, what if somebody's got a good, a couple good paying jobs in the household? They've got solid 401ks. They put a lot of money there. They've got a lot of equity in their home. How could they possibly be undercapitalized? I mean, what does that actually mean?
You just said it, right? Do you pick, and hopefully everyone picked up on it, at least our listeners would. He mentioned a lot of home equity and he mentioned 401ks. Both of those things are not liquid and not under your control. You have to ask someone else's permission to get to the money in your home, your equity in your home, or the loan feature if your 401k custodian has one. And then there's a max of generally $50,000 or 50% of the account's value. And that might have changed in some recent tax law changes. I'm not sure, but that's what it has been for a long time.
Right. Now you can liquidate that 401k if you want.
Yeah.
Right. But you'll just be stuck with paying 10% penalties plus income tax on that amount.
Huge tax bill. That's right.
Big.
And
can
you pay it?
Yeah. And they're not going to give you, they're going to withhold those taxes too.
Yes. I was lucky because in 2020 in the CARES Act, they didn't withhold anything. You had the option.
Yeah. Because you got to pay it back over 3 years. Right.
Yeah.
Pay the taxes. Yep. Yeah.
That's right.
Yeah.
Yep.
But so, yeah, you could do that. And I mean, I know people who've liquidated their 401ks because they're just fed up with it. They're like, I'm going to take the hit now because I'm done. And I want this money now. I want to put it to work now. I'm not advising that. But of course, that's an option. But undercapitalization, you don't have access to capital, whether that's your own cash or a line of credit somewhere. Just not having access to capital, that's a huge problem, because what does that force you to do if you don't have capital?
It backs you into a corner and you lose. You're going to be, whatever you do, you're going to be doing from a position of weakness, I think is what you're getting at. And then, maybe you make some poor decisions because you're backed into that corner and you just don't really know what to do. And that's, and Nelson says this, right? Sounds like an awful way to live.
Yeah. Yeah, it really does. It sounds like giving up a lot of personal liberty and personal freedoms because you don't have capital. Anybody who says money's not that important doesn't understand money. Either that or they're just lazy and they don't want to go work for it.
Or maybe they're like a Hilton or something and they just,
Yeah, right.
They inherit a bunch
But even if
whatever.
They thought about it, they would realize actually money is very important because I couldn't have this lifestyle without it. But
that's right.
Money is extremely important. If you read the Bible, I believe Jesus talks about money more than he talks about heaven. Like, that's how important money is.
Yep.
Not saying money should be your desire and your goal, right? But that's how important it is because the debtor is the slave to the lender. And it puts you in positions where you have to make decisions, one between doing something you don't want to do or feeding your family. Right. You can stand by your principles and your family can starve, or you can give up your freedoms and do something against your will so that your family can eat. And that's what 2020 was all about. A lot of people were in the corner where they did something they did not believe in, did not want to do, but they felt they had no choice because how else were they going to bring money in to feed their family?
Yeah. It was do this or lose your job.
Exactly. No matter how illegal and unconstitutional everybody knew it was, that was the world at that time, right?
So folks, remember who is doing that to you. I mean, that's very important to remember and not forget who was advocating for that. As a side note, and just to reiterate, and I've said this before and you've said this before, by putting your money into qualified plans, you are getting into business with those people.
With those same people.
That that don't like you.
Yeah. And we're not talking Democrats or Republicans. We're talking all of them. None
Yep,
of them
I
like
didn't.
you.
Yeah, that's right.
They like your money. And what they like, though, what they like and what that $30+ trillion worth of debt represents is the future work of Americans. That the only thing backing that debt to the rest of the world is the American work ethic.
Yep, future productivity.
And our
That's right.
productivity. The fact that
Yep.
we're the most productive country in the world. But man, even that's taking a big hit. But that's what's backing that debt. That's the only thing guaranteeing it is not the good faith and trust of the American government. It's the bet that the American people are going to continue to work their butts off to earn a
I
living.
love when I hear reporters say like the full faith and credit, or politicians say that. I'm like, what credibility do you think you have? With your own citizenry, number one, but throughout the world,
Yeah.
like probably not much. Last time I checked, the congressional approval rating was fairly low, like in the 20s.
Yeah.
Which is a surprise it's even that high, but
I know, right? Like who are I want to meet these people. This 20% of people giving them a good approval rating.
it's all those people getting that compo,
The
They're getting-
compo.
Yeah, that's what the Australians call it. Compensation.
Oh,
They call it, they shorten everything. Compo.
Yeah.
I'll have to send you a video later where the guy talks about it. It's hilarious. But yeah. So anyway, yeah, I don't know what inspired this topic, but I was listening to a podcast or something the other day, and it just occurred to me that IBC, kind of building that 10% as Carlos and Bob talked about, that can really make a nation strong. Is it's that the individual is financially stable, financially sound,
Yeah.
and can say no, like, hey, I don't need that handout. Thank you very much. You can keep that. It's not going to influence how I act or what I believe or how I vote.
Right. Just like the strength of the family unit is, if the family goes, the country goes.
Yeah,
I
no
think-
question.
Yeah, I think that's undisputed.
Because that's the
strength of
culture.
Yeah. Yeah.
You kill
and
the culture, you kill the country.
Exactly.
And that's
Exactly.
what, we're getting a little off topic, but that's what we're seeing. Some of it is from financial issues, obviously, but a lot of it's just, the moral fiber of the country is in rapid and it's all by design.
Yeah, it is. We're trying to take down some American icons like Anheuser-Busch. And it's sad, man. It's sad. You can, whether you boycott them or not, that's your personal choice. The sad part is, man, you're hurting the company, but it's also hurting those workers at the plant. There's a couple plants that have closed.
A couple
down.
of bottling
Couple
plants
bottling
that are
plants,
going to shutter, I think.
Real good Americans working at those plants because the company that they work for, made a bad bet. So
That marketing executive was like a Harvard grad and I think went to Wharton or something.
yeah,
Like, brilliant marketing strategy.
way to know your base.
My goodness. Anyway,
Yeah, but so back to more reasons why this is a good thing for the American and America. You, by becoming your own banker and creating your own banking system and not doing business with banks or doing less business with banks, because of course you still have to do business with banks. There's no way around it. You got to have a clearing account for that, for your cash value loan to come into, right? And to put it back in, to send it back to the company. You have to do business with them at some point, but you can minimize the amount of business you do with banks, which also does what? If you're not going to a bank to get that car loan or that home loan, like that'll be amazing when I can buy a home without going to a bank.
oh goodness.
But if you don't have to do that, what are you not participating in? Fractional reserve.
Fractional reserve banking. Inflation.
Yeah, fractional reserve banking and inflation, right? Because that's what it is. So, man, imagine, and that's why Carlos says if you could do 10% of the country would do this, we can make a huge impact in the banking industry.
Yeah, no question.
And the economy.
Central banking's terrible. And if you guys don't know, you can just look up what fractional reserve banking or fractional reserve lending is. It's how banking is done the world round, and it's been like that for over 100 years. It's not good. It's what makes... I always wanted this as a child. I remember my mom telling me when I was a kid in the 50s and 60s, a loaf of bread was a nickel.
Yeah.
Or 25 cents, whatever the heck she told me. And I always wondered, I was like, why did things get more expensive? I remember thinking this as like a 10-year-old child. And I couldn't, and I never really thought of, asked my father or my mom, why is that? But, now it's obvious, it's fairly obvious, even though things like that shouldn't get more expensive.
Right. They should get cheaper.
It should get cheaper.
Technology should make it easier to produce that stuff.
Right. In some
which
things,
it has.
Right. And in some cases things have gotten cheaper. I think of like flat screen TVs, LED TVs,
Calculators. Sure.
Calculators.
Yeah. Like technology
things that the
gets
government
cheaper.
doesn't touch. Plastic surgery, LASIK eye surgery. That's, a couple $100 out the door each eye. It's not.
Yeah.
20 years ago, that was for the elites. Now it's for anybody.
Man, whose Buick are you getting your eye surgery out of? I don't know. You could get it for a couple $100 an eye.
Yeah, now you can. There's ads all over the place on the radio for it. Yeah.
Yeah. Yeah. I don't know. I mean, the taxpayer paid for mine. So
yeah. I was just born with perfect eyes.
You were born superior genes like Dwight Schrute. Yeah. So stop participating in fractional reserve banking, right? Another thing that helps the family unit is conquering all these laws of human nature. And they're really tendencies of human nature, right? Because you can conquer them. But what is, one of them Nelson talks about big time is Parkinson's law. It works in so many different things. Like expenses will rise to meet your income.
Right.
Right? Like, I don't know how many clients I have who make really good money on an annual basis, but because of wealth erosion, like taxes, obviously is the biggest and first, and then lifestyle creep, all the other expenses, they just don't really have as much to show for it as you would think they would, if you were making that kind of money for a certain number of years. So, yeah.
Nelson addresses it in the book, lifestyle. He does mention boats a couple of times, doesn't he?
Yeah, you've got cars, you've got boats.
Yeah.
But you haven't, but you don't get those things on credit, right? I mean, you've got the capital to pay for those things if you want to.
Yeah. I think when we bought the boat, we took out a 10-year loan on it, and then paid it off, quicker than that. This was before I really understood what I was doing with money, and I wanted to pay it off as quickly as possible, and I did.
Yeah.
But yeah, certainly wouldn't be buying. We certainly don't buy things we couldn't afford, right? So
yeah, that's playing honest banker.
Yeah, and the other thing, kind of like we've talked about too, is I like using the strategy of when you're buying. We could talk about this, folks. Dave's buying, a new car.
I just did.
It just did. And once again, I was consulted.
You're my car guy. You're my car guru. But I got that the day after Hannah's birthday. I even asked the dealer, I was like, do you got one of those big bows that you see on those stupid car commercials? And he's like, people ask us all the time and we don't have them. I don't know why.
Yeah, hint, go get some.
Go get some, man. Yeah.
Yeah. What the heck was I going to say, though? But when I want to pay for something that I want, I create an income stream, whether that's actively doing... Maybe I'm doing more life insurance business, or maybe I'm, selling lemonade at the county pool or whatever. I'm making things up, or I'm investing in real estate to create a passive income flow to pay for that thing that I want. And once you're in that mindset of doing things like that, you can get the things that you want, like a nice new car or a boat, right. And of course, my boat's 9 years old. It's
yeah.
It's not like I get a new boat every other year.
Yeah, just like, right before we went live, I was talking about how I plan to to
Yeah.
use my capital to fund something that will make the monthly payment for that car.
And of course, if all that capital were in a 401k or an IRA or something like that, some kind of qualified plan, you wouldn't be able to do that because that money,
I'd be paying out of pocket. I'd be like, okay, now I got to come up with this much more money every single month to pay, or I have this much less disposable money to mess around with every month. But no, now I have capital and I can go put it to work somewhere, and an opportunity that's come my way that I know how much I need to put away to earn enough to pay for that car every month, make the car payment.
Exactly right.
And the extra insurance payment, right? Just throw that in on top as well.
Yep. You know, it really goes back to the mindset of the IBC practicer, the person practicing IBC in their life.
Practicer?
Yeah,
Is that a word?
practicer. I don't know.
Practitioner is, but that's a different. We're practitioners. Yeah. But you're an IBC user.
A user of IBC?
Practicer.
A user of...
I don't know if that's a word, man.
I know. I want to make it a word.
Okay.
If bling is a word, I
Boom,
can make
just
practicer a word.
It's a word.
It's a word.
Yep.
But anyway, one practicing IBC, okay, he or she is looking for those opportunities, right? They're thinking, how can I get a month of rent free? How can I finance this car purchase? How can I finance this home down payment? Whatever it is, how can I finance my child's college education? And because they're putting capital in a place that they can touch without penalty, without tax, without permission, the life changes of that entire family.
Oh yeah, yeah. The light bulb moments you'll have as a practicer, and yeah, the freedom for your family.
You just keep saying it, and it becomes.
I know it already
becomes
sounds
normal.
More like a word. You're Googling it right now, aren't you?
Yeah.
Yeah. Anyway, and then one of the biggest things, well, you just hit on it. You know, probably the final thing I wanted to say was imagination. Is that a word?
Well, it's a British word.
Yeah. Yeah. Well, you know, I was on a phone call. I was on a Zoom call with our private lending team. And we have a couple of Brits on that call. And it was July 3rd. And we were doing a team call. And I signed off and I said, hey, everybody have a great, happy 4th of July. Suck it, England. And we'll see you guys see you guys in a couple of days.
Oh, so that's good.
You got to give them crap. It's not their fault they were born there.
Yeah, nobody's perfect. I'm actually I'm re-listening to Bill O'Reilly's book, Killing England.
Oh, I haven't heard of that one. I haven't
good.
listened to that one.
You know, you just learn different things. Reading.
I like the way his ghostwriter writes. Yes, Bill didn't write a single word of those books.
Yeah, they're well researched and well narrated.
Yeah.
And there's always just those little details like I didn't know that.
Yeah,
or, I didn't know that.
Yeah, they're fun. Yeah, but so I hope everybody kind of can wrap their heads around why now IBC is not just good for you as an individual, but good for your family, good for the American economy, good for culture. Like so many different things. Taking personal responsibility, which I think is one of the key components of IBC, is you're taking personal responsibility. You're not abdicating your financial future to some unknown hedge fund manager or market maker or even a known person, your best friend who works in the markets. You're not abdicating anything. You're taking control and taking personal responsibility. And then, if it fails, it's on you. If it goes well, it's because you played honest banker and you were smart with the way you went about it. So, personal responsibility is one of the hallmarks, I think, of what made America America. We need to get back to that and start teaching it to your kids too. Right?
We need more practicers of IBC.
We need more practicers. So
it is a word.
Okay, good.
It is a word.
In England.
No, they just spell it differently. It's actually...
They spell it with an S?
It's a derivative of practice.
Okay.
But we also talked about, Dave, that was a great summary. we talked about, the family, right, being important, the family unit being important. And we all know, I had an elementary school classmate, posted her mom passed away recently. And she was like my second grade CCD teacher. Love, just a wonderful lady, super, super friendly. But it always goes back to, I think of my own family, and, our parents are all getting up there and had IBC started in their generation, if they had started practicing IBC with some sort of cash flow way back in the 1970s when they're all young, buying whole life insurance with dividends going back in to buy paid up additional insurance every year, right? How big those contracts would be. And gosh, would that windfall be nice for the next generation or the surviving spouse if there is one, right? No one's ever going to be like, oh, no, I don't, no, you can keep that.
Right.
That becomes now premium for the next generation or policy loan repayment. Or, and David Stern's told that story of before Nelson passed of, hey, do you have any policy loans outstanding? And he's like, good.
Yeah. Good.
You're about to get a windfall.
Exactly. So you got
multiple windfalls.
Plan for that. Yeah. So awesome, man. Well, hey, good summary and good topic. We could keep going, but I think most people like the shorter episodes, 30-ish minutes. So I think we'll just keep it at that. I'm not a big fan of talking too much anyway. So, all right, man.
Just pay your damn premium.
Pay your premium on time.
That could be an episode.
That's a good one. Sounds like something James would say.
Yeah, I just paid my fourth premium on one of my policies, my bigger policy. So
nice.
It's always good.
That's fun. It's It's amazing how quickly the years go by when you're like, wow, I've had this policy for 4 years, 5 years. I had a policy for 13 years now. Like it goes fast.
It does. Fast. And people will always say that too, don't they? They're always like, man, I can't believe it's my third or fourth premium already. I feel like we just started. We were just talking about, hey, Paul, what's this IBC thing?
Exactly.
Or hey, Dave, what's this IBC thing? Right. It's great.
Yeah.
So,
well, all right, everybody. Hey, have a good week and enjoy the summer weather while you can. And until next time, control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.